Will a housing crisis hit Florida? That's what everybody wants to know, and that's what we're going to cover today in great detail because February numbers are out. It's the most current data that exists out there, and we're going to do a deep dive into South Palm Beach County, which happens to be the market that I serve. Now, we are going to look at the real data. We're going to look at single family homes. We're also going to look at townhomes and condos. And we're going to trace back what it looked like in 2008 because there have been a lot of folks out there talking about the housing crisis, myself included, that is going to hit Florida. That's bound to happen. And there have been naysayers and apocalyptic predictions that have gone on nonstop since 2008. So I really want to go back and trace the history of home values in this area so we can finally determine where we can expect home prices to go in the long term. And full disclosure, I am not an analyst. I am not an economist. I am not an attorney. There are lots of things that I am not. But having been a stockbroker for almost 20 years, I can look at trends developing on a macro level, and I can certainly predict what I think is going to happen in the relatively near term based on what's happened in the past. But without context and without perspective, without knowing what the market has actually done since 2008, and only listening to the negativity that exists out there is not a good idea because it confirms your biases and the numbers don't lie. So don't believe anything I have to say and don't believe anything that anybody else has to say. Verify, do your own research, do your own due diligence, and understand that the numbers don't lie, because I suspect there is going to be a lot of pain that happens over the course of the next 12, 24, and 36 months in every market. And there's going to be a lot of folks that feel the pain of this recession in a big way. But does that mean the market's about to get eviscerated? Does that mean that half price homes are on the table? Does that mean the sky's falling? Yet to be determined. I don't know. But I do know that the most current housing data is in, and we're going to get into it right now. And we're going to do a deep dive into the monthly indicators for South Palm Beach County. And I'm not going to bore you with reading the summary of this because I've already covered the content contained in this write-up for months. As a boots on the ground operator of a high performance real estate team, everything that you're reading in here, I've been talking about constantly. So you already know what's going on. We know that interest rates have skyrocketed, and we know that there was a brief period of time where they downticked, and buyers that were on the fence jumped back in. And then banks started failing. And fear has upticked. So what we're about to look at in February is certainly not what's happening right now in March, but I'm going to cover that too. So let's get into what February yielded in South Palm Beach County so that you've got the best information to make the best decisions for yourself, for your family, and for your financial bottom line. And we're going to start with the single family market overview. And we are going to trace this back to 2008, so you've got some historical perspective. But as you can see, closed sales took a big hit, down 27%. We've been covering that in great detail. Sales across the board in Florida have fallen off a cliff. Sales everywhere have fallen off a cliff. There are far less sales happening in today's market compared to a year ago. Median sales price for single family homes in South Palm Beach County upticked by 0.3%. Still positive, still appreciating, but not even single digit growth. We are talking about moderate marginal growth. From 568 to 570, yeehaw, we're in the green. Average sales price up 8% from 970 to $1,047,000. And if we look at year over year numbers, it's 5.5% and 24.8%, which is a big uptick in 2023. Now, the housing market in totality, talking about the entire United States, lost over $2.4 trillion in equity over the near term. And yet, South Palm Beach County is up almost 25%. And I've talked a lot in the past about certain markets being more insulated than others. South Palm Beach County is an anomaly in that there is no more land to develop. There is massive scarcity of resource. There is tremendous demand from people around the country and around the world that want to live in South Palm Beach County. And until that changes, until demand falls off a cliff and supply increases exponentially, home prices are going to continue to appreciate. Now, I suspect they will continue to appreciate at single digit growth for the next year or so. I suspect it's going to be modest growth, but I could be wrong. It could skyrocket. But I could be wrong. When the housing data comes out in May and it catches up with inflation, I suspect the two of them, I suspect both are going to start to cooperate, and I suspect mortgage interest rates will start to decline again. But that's excluding the possibility of a bank run or a liquidity crisis or an economic event or a world event, which could absolutely shake the core of confidence that exists in homeowners in this region or buyers that want to live here. If China invades Taiwan or Russia does something worse in the Ukraine, if there is a global crisis or a monetary coup, well, then that's very likely to change the dynamics of homeowner sentiment. Because when people are afraid, they typically stop making big financial decisions. They stop purchasing in general. They start to hoard cash up until they can't. And right now, there are plenty of people, plenty of homeowners in Florida that feel equity rich. They're sitting on massive amounts of equity, which isn't real up until it's realized, which is really just a long way of getting to that homeowners in this region are not terrified yet. They aren't panicked. And until that happens, I suspect it's going to be business as usual. And let's look at what that business is. And what you can see is that the dollar volume of closed sales dropped 21.5%, which is expected given that closed sales are down 27%. Percent of original list price received is down 7.5% from 99.1% to 91.7%. Well, that's been exactly my experience here in the market. Buyers have leverage, they can negotiate, and we can finally score better deals for you, which is far more exciting for me because I love to negotiate the best deals and score your dream home at a massive discount. In Q1 of this year, every single buyer that we represented walked into a massive discount relative to original list price. And most of them walked into instant equity. And we can help you too. So if you're interested in buying or selling a home, please reach out because we would love to help. Housing affordability index dropped 22.1% from 77 last year to 60 this year, which is absolutely a function of the fact that the average sales price upticked by 8%. Housing isn't getting more affordable, it's getting less affordable. But how is that possible? Because the market is crashing, the market is crashing, the sky is falling. Well, that may be true in some markets, but it's not true here yet. And frankly, I don't know that it will ever be. Median time to contract, massive uptick, up 260%. It's now taking 36 days to go under contract, as opposed to 10 in February of last year. The days of getting your home under contract in 10 days are pretty much over unless you work with the right professional who knows how to create a market within a market and find the one buyer on planet Earth willing to pay more than anybody else. But if you price your home the right way, it definitely does not take 36 days to get your home under contract. But make no mistake, homes are sitting on the market longer. Pending sales up 0.4%. Pending sales in February are up 0.4%, but they're actually down almost 11% compared to last year. New listings down almost 13%. Less folks are listing their homes in this market. And I suspect that's got a lot to do with the fact that mortgage interest rates have skyrocketed. And most homeowners who have a mortgage of 3, 4, 5% or lower are not going to be bullish on trading into a 7, 8, 9 handle mortgage. But the truth is, if you're working with the right real estate professional who knows the market, the hyperlocal market, and can negotiate the right way, chances are they can negotiate a seller credit to buy down your interest rate. And I'm not talking about an adjustable rate mortgage or marry the home, date the rate, none of that nonsense. I'm talking about the seller coming in and buying down your rate aggressively so that you are in under whatever the interest rate is at the time. Forever. And I shouldn't say forever, for the term of your loan. Which takes us to inventory of homes for sale, which has increased 70.3%. we'll just round it down to 70%. Big increase in inventory of homes for sale, which is fantastic news if you're thinking about buying. It's no bueno if you're thinking about selling because there's far more competition. Buyers have the leverage. And if you're thinking about selling, the time to do that was yesterday because I suspect as the pain of recession gets worse and as the masses begin to feel that pain roughly around the same time, there's going to be a lot more competition on the market. And then you have zero leverage. And then it puts you at risk of playing the falling knife game as far as home prices are concerned. Because when the market is scared and the economy is challenged, things move up and down very quickly. Month supply of inventory up 121.4%, a jump to 3.1 months, which is still a seller's market. Now, to be clear, I'm talking about South Palm Beach County. The markets that trade within this market will have very different dynamics. So it's critical you understand the hyperlocal market wherever you're thinking about buying or selling, because this macro picture, while instructive, is not going to be what's happening in your hyperlocal market. But the trends are not your friend, and this is what they are in South Palm Beach County. Now let's go to townhome and condos because I don't typically cover this, and I think it's important information for you to understand. Townhomes and condo market overview. Closed sales, whopper, down 42%. Median sales price up 7%. Average sales price down 6.4%. Painting very different pictures and very different price points. So median sales price for a townhome is up 7% to 288 from 270. The average sales price is down 6.4% from 432. Well, if you're shopping for a townhome or a condo and your agent tells you great news, median sales prices are up 7%, you're going to feel a certain way. And if they tell you that the average sales price is down 6.5%, you're going to feel a completely different way. And I don't particularly care for the fact that most people lead with the better number, which is why I always say it's critical to understand the hyper-local market that you're shopping in, because these two distorted numbers are not really very helpful until you get into the comps of the area in which you're shopping or that you're thinking about selling. Because if I tell you up 7% or down 7%, you're going to feel completely confused and think that everybody's lying to you. It's just a numerical distortion and can tell you a different story than you perhaps want to hear, but must know. But if we look at year to date for 2023, the trend is different. Up 12.2% for median sales price and up 4.3% for average sales price. So the big crash, the sky is falling, it's the end of the world sentiment that exists out there in many places. Well, that might happen in the future, but as of February, despite the fact that the US housing market lost $2.4 trillion, we still see an uptick of 12.4% as far as townhomes and condos in South Palm Beach County. Dollar volume, well, that took a big hit, down 46%, but of course that's tied to closed sales also being down 42%. Percent of original list price received is down 5%. Gone are the days of everybody getting 100% of original list price, and now buyers have leverage. And I suspect that is going to continue to be true. So you can certainly negotiate a much better deal, and that's what the market's telling us. It's down to 92.9%. Let's just call it 93. The housing affordability index dropped 27% to 119 from 163. Time to contract up 167%. It now takes 32 days versus 12. Pending sales down 12%. New listings up 6.5%. Inventory of townhomes and condos for sale is up 113%. There is much more competition in this space, which is great if you're thinking about buying, no bueno if you're thinking about selling. And month supply of inventory jumped to, that's up 192% to 3.5 months, up from 1.2 months. So big jump in terms of month supply of inventory, and it's trending to a neutral market, which I suspect will then trend into a buyer's market. But to be clear, 3.5 months is still a seller's market, which brings us to closed sales. Now, this is very important, and I really want to get granular on this. But what you can see is that closed sales in February are down 27%. The 12-month average is down almost 29%. Year to date, it's down 30% for townhomes and condos. So to be clear, column number one is single family homes, column number two is townhomes and condos. But it's obvious that closed sales for both have fallen off a cliff. And if we look at this historical chart, which goes back to January 2008, the dark blue line is townhomes and condos, and the lighter blue line is single family homes. And what you'll see is a massive drop from the peak up here for townhomes and up here for single family homes. So let's call this 1,100 closed sales for single family homes. And I know that's not 100% accurate, but it will do for now. We have fallen from 1,100 plus homes for sale down to what looks like something close to 400 and change, maybe 500. The number has been cut in half. But let's go back to 2008, which looks like 200 closed sales for both single family homes and townhomes. Well, I'm no mathematician and I'm certainly not a statistician, but it looks like we're getting close to 2008 in terms of closed sales. And I suspect that number will continue to decrease before it eventually upticks once again. Which takes us to median sales price. And again, this is the point at which half of the sales sold for more and half of them sold for less, not accounting for sellers' concessions in a given month. And again, to be clear, these are single family homes in South Palm Beach County on the left, and it's townhomes and condos in South Palm Beach County on the right. And in February, we upticked 0.3% for single family homes and almost 7% for townhomes and condos. But the 12-month average is up 17.6%. 17.6% of appreciation over the last 12 months. So while other markets are getting absolutely shellacked, that has not been the case in South Palm Beach County. But if we look at the top of the market historically, which is up here somewhere around 700,000. We can buy the dip and sell the rip. That's the stockbroker in me coming out. Let me take off that stockbroker hat and put on my real estate professional hat, because you should not trade a house like a stock. But what you can see is that we had a significant dip from the high of close to 700,000. And really, it's more like 650. So let's use 650 to illustrate the point. And again, I know it's not perfect, but 650 somewhere in 2022, which dropped to right around 550 for single family homes. And then it upticked over 600. And now it's floating right around 570. Again, to be clear, this is February numbers, not March. And we're in March right now. But those numbers are not going to be out until April. But not to worry, I've got March numbers and I'll share them in my next video. And keep in mind, I know there is tons of fake news out there. There are tons of content creators out there that are telling you about the markets getting eviscerated and how home prices are getting completely demolished. And while I know that in the future, the pain of recession and the fear of economic changes can absolutely shake the market to its core and change the dynamics of the fundamentals and change home prices radically. And we only have to look at the last dip to confirm that that's true from here to here. But if we go back in history and look at the long-term trend, what you'll see is the bottom of the market, which was somewhere around 2011 or 2012. Both of these numbers seem to be relatively close. Under 200,000 for a single family home and under 100,000 for a townhome or condo, values have tripled over time. And over the long term, they will do the same. But near term, if you're prudent, if you're disciplined, if you're opportunistic, you're very likely going to score a much better deal. And if the market crashes to zero tomorrow and you don't sell, you don't actually lose anything. And as the market continues to do what it will do, because the market is always right, and cash seeks its highest value, at some point in time in the future, this number, which is under 600,000, is going to be off the chart. And if you don't believe me, please ask your family, please ask your parents or your grandparents or your great-grandparents if they're still alive, and ask them if they wish they held on to any piece of real estate, any home they ever bought, Ask them if they wish they still held that asset, because that asset has increased exponentially over time. And to be clear, I'm not trying to talk you into buying a house right now. Only buy a home if you can afford it and it's right for you. Do your own due diligence, but please understand the long term trend for real estate in Florida is going higher, period. End of story. And the average sales price confirms what I just shared in the median sales price, which is that real estate always trades. And you can see there has been major growth across the board, but there's also been some downticks. And again, this first column is single family homes. The second column is townhomes and condos. But what you can see is in February, there was an increase of 8% in average sales prices, 48% in January, -22 in December, -7 in November, +12, +8, +16, +20, +13.8, -3.2, +22.5, and +3.6, which gives you a 12-month average of 8% appreciation. And please keep in mind that this timeline consists of the same timeline in which the US housing market lost $2.4 trillion in value. But South Palm Beach County is up 8%, and townhomes and condos are up 13%. Well, historically, the average sales price, rolling it back to 2012, which seems to be the bottom, let's call it $300,000 for a single family home. In South Palm Beach County, well, that number is now north of $1 million. And the same thing applies to condos and townhomes, in which you could have purchased one back in 2012 under 200 grand. That number now sits over 400. And while I expect the pain of recession to change prices in most markets, and keeping in mind that this is February and we're in March, the trend over time is going to continue to go higher. And the boogeyman is not coming. But you can bet your sweet bippy that better deals are. Which takes us to dollar volume of closed sales in millions, which was down 21.5%. The 12-month average is down almost 23%. And townhomes and condos tell a similar story, down 46% in February. But again, this is because closed sales in totality have fallen off a cliff. And so I'm not going to spend a whole lot of time here, but you can see on the chart that we've gone from the high up here to the low down here, which relative to the bottom in 2009 is basically a 50% retracement, which takes us to percent of original list price received in South Palm Beach County. And I'm not going to spend a whole lot of time here because I've already covered it. But as you can see, in totality for the last year, the 12-month average is down 2% for single family homes. It's down 0.6% for townhomes and condos. But it's a big drop from the 100% that we saw at the peak. But back in 2009, when the shit hit the fan, and you could very likely negotiate something close to a 25% discount from original list price, there's still a lot of room to drop. Will it happen? Yet to be determined. I don't know, but I do know we can negotiate far better deals than original list price in today's market because buyers have all the leverage, which takes us to new listings, which is a count of the properties that have been newly listed on the market in a given month. And what you can see in February is a decrease of 13% for single family homes and an uptick of almost 7% for townhomes and condos. But the 12-month average is down for single family homes 2%, and it's down 4% for townhomes and condos. Homeowners, property owners, no likey high interest rates and will be very reluctant to trade up into a higher handle for a mortgage interest rate until they're forced to sell. And right now, with the massive amount of equity that most property and homeowners have, they're not going to do that anytime soon. Or let me say that differently because I don't think I got it right. If they must sell, they're going to sell their home. They're not going to be forced to sell their home. And so I don't suspect that there's going to be any major uptick in forced sales anytime soon. But I do suspect there's going to be a lot of homeowners and property owners that get panicked and rush to the market, which will flood the supply and very likely bring down prices, which will then become the falling knife game as far as home values are concerned. Yet to be determined, I don't know, but I'll continue to tell you the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. Which takes us to inventory of homes for sale on the market in South Palm Beach County. And to be clear, this is your competition if you're thinking about selling. And these are your choices if you're thinking about buying. And what you can see is a major uptick for the last year. 12-month average is up 45%. There are a lot more homes and condos for sale that are sitting on the market unsold, which is no bueno for sellers and muy bueno if you're thinking about buying because you've got all the leverage. But if we look at the historical inventory of homes for sale by month and roll it back in time to 2008, back in the housing apocalypse, there were 8,000 plus homes for sale sitting unsold and damn near 10,000 townhomes and condos sitting unsold. And right now we're at 2,000. And to be clear, that's inaccurate. It's actually 1,812. But you can clearly see what the housing inventory looked like in the apocalypse. And until we get back to something similar to those numbers, chances are home values are going to continue to appreciate at modest growth levels. Which takes us to months supply of inventory. And as you can see in February, an uptick of 121%, 3.1 months of supply of inventory of homes for sale in February, and 3.5 months for townhomes and condos. But if we roll it back to 2008 and 2009, there were 25 and 30 plus months worth of inventory. But 2015 through 2019, which to me is a more balanced normal market where there were 5 months of inventory, which is far closer to a buyer's market, well, you can see that we're returning to normal. But if that inventory upticks to 15, 20, 25, 30, 35 months worth of supply, you can bet your sweet bippy that home prices are going to drop fast. Which takes us to the grand finale, the total market overview for everything. This is inclusive of all property types. Closed sales fell off a cliff, down 36%. Median sales price is up 8%. Average sales price is up 8%. Dollar volume also fell off a cliff, but that's to be expected because closed sales dropped 36%. Time to contract up 209%. Pending sales down 7%, new listings down 2%, inventory of homes for sale up 93%, and months supply of inventory up 183%. Which brings me back to, will a housing crisis hit Florida? And as of February numbers, the answer is no. But that certainly doesn't mean that's what it's going to look like when the pain of recession and fear of economic change shakes the core of the consumer, shakes the core of the homeowner. Until the psychology of the market changes enough to create widespread fear, I suspect it's going to be business as usual and single-digit appreciation into the future. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, and check out my next video because I suspect you will love it a lot. And until next time, peace.